Welcome back to the Wolf of Property and Casualty. I'm your host, Derek Lasniak, with over 15 years of commercial broking experience focused on the middle market, upper middle market, national account space. Today, we're going to talk about flood insurance. Flood insurance is, and I'll probably bring this up a few times over the next month or so, call it soft market changes conditions. And I've mentioned this in a few other episodes. I did an episode on the top 5 things to ask for in your commercial property policy where flood was on it. I also have talked a little bit about utilizing the soft market to not just focus on rate, but to focus on terms and conditions. And I've seen that actually mentioned in some of the reports that have come out, bolstered by the just outrageous profitability that our insurance carriers have seen. And I'll just make a comment on that. I saw some more recent reports come out and say that uh, cat season and hurricane season is artificially propping up, the profitability of insurance carriers. And I think for brokers out there and for buyers out there, if you're getting this message or you're hearing this message and, buying into it, here's what I would caution you. Yes, this is insurance. This is calculating risk. It is a more sophisticated form of gambling. So, yeah, last year we didn't have a lot of hurricanes. But ask yourself, in a year where you didn't have a lot of hurricanes, don't you deserve the same market reaction on the years that there was really bad hurricanes? I mean, I just don't buy into that from some of the executives out there, because I sold for 5 years in a hard market, wildfires, and we all have to participate in the loss. And so, yeah, I get it. It's maybe not indicative of a normal year because we had lower hurricanes, but just like an organization or a publicly traded company adjusts their dividend quarterly that they're going to pay out based upon the results, why am I as a customer not getting that same thing? So, I just something that just keeps kind of sticking in my head. But today, I'm not talking about that. Today, I'm going to talk about commercial flood insurance. And the reason I want to bring this up is I haven't done an episode on this, and I had too many close calls in my career relative to flood, because flood insurance is something that, especially I live in the Midwest, is really, really important. And it's for some reason gets overlooked, or for some reason it's hard to make sure that you have enough, especially if you work in large TIV placements where you have, you feel really confident about your blanket limit of insurance because it's tied to your total insurable value, which is tied to a spreadsheet, which is tied to a signature from your customer. Perfect. Great. I got my cover my ass in place. But flood, you're not necessarily getting flood without a few exceptions included as a cause of loss. So remember, when we see water losses, specifically in places prone to it, like in the Midwest or in coastal exposure, it's kind of a different animal. We're not getting that as a cause of loss where we get the benefits of our full limit. So I want to just tick through. This will be a quick episode just to tick through some considerations for flood. And I would say if you've been beaten down on your flood limit as a buyer or as a broker over the hard market because you kept having to give and give and give, now as you're looking at potentially rate decreases and a softer marketplace, now would be the opportunity to say, I want to revisit the flood limit. Because what I think I know about insurance carriers is they have flood capacity. It's built into their reinsurance treaties. And barring the severity potential of flood, they have a bucket of flood, so to speak, that they can deploy across their portfolio. So they can give you more with the right approvals. So flood is traditionally going to be looked at as a rapid inundation of water. And you've heard me talk about this before if you're a longtime listener. It doesn't necessarily anymore mean that you have to have a river or a body of water in your backyard. I think what we've learned over the last 5 or 6 or 7 years is that we have seen rain patterns where we've gotten 8 inches of rain that have accumulated very rapidly and can cause flood-like losses. And that doesn't matter if you're at 1,000 feet of elevation or if there's a stream that runs through the back of your facility. It can still happen. And so take that and remember that, because that's your advantage. Now, flood mapping is based on NFIP flood maps. And what I mean by that is there is a map out there. We used to use some software called like Risk Logic. You can get really cool maps, and they will, red, and they will put green, and they will tell you your flood plane, your flood zone, X, Y, A. And those flood zones are tied to the underwriting of your account. And depending on the severity of your floodplain, usually is the underwriter's single tool that they can use to dictate how much flood insurance they are going to give you. And so it is important on all of your risks. And maybe this is a time to look at your entire portfolio, brokers, and just run those maps on all of your risks. So, before you even hear from an underwriter, this is in a floodplain. I can't give you any flood limit. So, this is an opportunity. It's also a great opportunity to tell your client, hey, or if you haven't already told them, hey, you're on the border of a flood zone. And not every insurance carrier is going to look at the flood zones differently. Some will still give some limits, some will look at certain conditions. And so keep that in mind. The next thing I want to talk about is you're not going to get, unless you're working with FM Global, for example, which does so much underwriting on the front end, or you're in a national account space where the premium is so high and the deductible is so high that there's a lot of opportunity to put in, generous flood limits. Typically, your standard lines carrier isn't going to be comfortable putting out more than $10 million of flood, and 10 million would be a lot, assuming that you're in a non-flood, plain or high hazard. So, 5 to 10 million. But flood is one of those things when I talk to my customers, I was always telling them, you don't necessarily see floods, especially in our region, level buildings, burn them to the ground necessarily. You're typically going to have 6 inches of water throughout a facility, which, all the drywall's got to replace. You got to squeegee it out. You got to do all the things. And so you don't necessarily need to make sure you have the same amount of limit that you have for fire loss, but you can't go naked. So if you have no flood on your policy, there are some things you can do about it, but this is a softer market condition where I think you should really be asking, hey, can we revisit the flood conversation? Flood is an all-inclusive limit. So don't get lost and confused. Like on a commercial property policy, I got my business income bucket over here and my property damage bucket over here, and they're separate. Keep in mind that, and you have to look at the language, keep in mind that flood provided from an insurance carrier is going to be inclusive of property damage and business interruption. And the business interruption and the flood losses that I had is almost more severe because it takes a business out of operation than the actual property damage at times. Keep in mind, for a lot of manufacturers, which I worked, a lot of the product and finished goods and raw materials are stacked on racks. And so the types of flood losses that we see the most, the 6 to 8 inches of water that are coming through the facility, don't necessarily ruin everything. They might screw up machinery, they might screw up equipment, but some of the raw goods, the materials, are not necessarily always going to be hurt. But keep in mind, your business interruption is going to be included in that. How much flood is really going to be indicative of having a conversation with your customer. I like to use the same philosophy I use for business interruption. What's your biggest facility to which you have a risk of a shutdown? Let's take a look at that facility. Are there things stacked on the floor? How long could you go? Do you have any backup plans? So focusing on the largest facility, if it's a single facility, the only facility, is an easy way to put your number or your hands around how much flood. And I will tell you, in my experience working as a professional, it was how much flood can I get? Because I worked with companies that probably had more than the flood limit that of exposure in the worst case scenario. But it was just, a function of capacity. And we'll talk about excess flood here at the end. So another thing, if you're getting offered flood by your insurance carrier, always, 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 always look at the fine print in their flood policy and their flood endorsement. Some policies will be offered to you with an endorsement for flood insurance, but the fine print will say, if you're in a flood zone X, it is required that you have an NFIP policy as a buffer. And this is something that's very common in the industry. And in my experience, I had more than on one occasion an underwriter not even understand their own flood endorsement. So what I mean by that is they might offer you $2 million of flood blanketed across all your locations. However, in the fine print of their insurance carrier language, it says if any property that suffers a flood loss is subject to a flood zone A or X or one of the higher severity, it is required that you have a full NFIP policy in place prior to us paying on any covered loss. Well, an NFIP policy is the National Flood Insurance Program. It's a subsidized insurance program for flood losses. Pretty sure it loses money. They keep having to ask Congress for more money to fund it, which is ding, ding, ding. For you insurance brokers and buyers out there, if you're in a high floodplain and you have a river in your freaking backyard, you probably have already been told you can't get flood insurance. I hope that most brokers out there are saying, at a minimum, let's get an NFIP policy, because you're not going to be declined. It's for high hazard. It's like the E&S market subsidized by the government. Now, you're not going to get $10 million of coverage, but you can get $500,000 of hard asset property damage coverage. And again, this ties back to my comment about the insurance carriers. Some insurance carriers are going to have a condition. And like I said, I had a number of times where I thought I had flood and the insurance carrier didn't mention this language in their policy form. And I almost realized too late that I had to have an NFIP policy. So NFIP is going to have a lower deductible. It's going to have a $500,000 limit. But again, it's not going to include business interruption. So it's subsidized. And that's probably because the government doesn't want to go through the pain in the ass of doing an adjustment on a BI loss. But anyway, make sure that if you are getting flood coverage, check your policies to make sure you're not required for certain flood zones to have an NFIP policy, like a difference in conditions type arrangement, which would require you to buy a $5,000 NFIP $500,000 limit. And then that becomes the underlying attachment for whatever flood your carrier is providing to you. Also, whether it's an insurance carrier or an endorsement, take a look at how the valuation is. Some policies will limit actual cash value. And so, yeah, you might have all of your goods on racks and you might have all your equipment slightly off the floor, but actual cash value could severely limit your ability to collect on a loss. So again, the flood is a separate endorsement from your property form, and all of its conditions are going to be laid out in that endorsement. So do I have true replacement costs? Am I getting business interruption? Heck, even if I have replacement costs and I have an organization like a distribution center that has a lot of finished goods held for sale, I have sale price on everything. And maybe I'm banking on that sale price in the terms of a fire to cover the profit because my business interruption doesn't necessarily have as much coverage available to it. So now I have replacement costs, but I'm still listing margin, might be 20, 30%. And now my profitability for damaged goods held for sale is going to have an issue. So these are things that you really need to keep in mind in order to make sure that not only your flood program is put together right, but you have enough limit. You're eyeballing to know if you have to have an NFIP policy as an underlying condition. And if you do have a risk or you do have a client that is super sensitive to flood, people who have gone through floods from rapid inundation of rain, we had an incident about 4 years ago in Madison. They're super sensitive to how disruptive it is. There is excess flood markets, and that's in the E&S market. And once you're able to put up a reasonable layer, 1, 2, 3, even $1 million from your standard lines insurance carrier, that gives the next person, let's say you have $500,000 of NFIP and your insurance carrier says, look, there's floodplains here. It's a soft market. I want to keep this account. I'll give you $1 million, but that's all I'm doing. Well, now you can take that 1.5 million attachment and go into the excess market. Those excess underwriters know that the likelihood of a single loss producing more than $1.5 million of flood damage, even if there's 6 inches of water in the facility, is somewhat low. So you're going to have more favorable underwriting in that E&S placement. But again, now you're going to have to add an excess flood policy. Don't sleep on the fact that if you have an NFIP policy, your standard lines property carrier with $1 million of flood, and then an E&S player providing $5 million of flood, you now have 3 policies covering the same flood loss, all with non-ISO language. So you have to tie this stuff together. And in a moment where the market is softer, and I believe that you are more able to get more flood limit, now is an opportune time to try to do so. But unfortunately, it's going to require a lot of symmetry between your coverages. So this is one example of, if I can't get as much rate as I need, how am I bolstering in this softer market condition to enhance the terms and conditions in my policy?